Welcome back here at the World Economic Forum in Davos, Switzerland. I'm joined right now by the CEO of GE Vernova, Scott Strazic, with us. Scott, great to have you.
Maria, thanks for having me.
Thank you so much for being here. Tell us about the company. You have been all in on power, electrification, energy. Where does that stand in terms of your efforts to grow the overall company?
Yeah, I mean, if you take a step back, 25% of the world's electricity every day is powered with our equipment through our customers. So that gives us a privileged opportunity to serve this market when a lot more electric power is needed. So
where is the power needed? Is this all about AI and data centers?
AI is a contributing factor, but it's not the only one. At the end of the day, there's a reindustrialization of manufacturing growth. Think chip factories in the US. That requires more electrons. As industries electrify, whether it be EVs, whether it be heat pumps for homes, that has an impact. So there are a lot of drivers leading to increased demand, and we're investing to fulfill that increased demand.
Well, President Trump wants supply chains in America, and he's trying to get corporate America to understand that this is a national security issue. Do you agree with that? And do you think corporate America is getting it in that regard?
The vision that he has, and he talked about a year ago with an energy emergency in the U.S., we completely are aligned with. I think for national competitiveness, for jobs, we need to win in this regard. We are investing in our core businesses, more than 1,000 people in our gas business, Greenville, South Carolina, to drive more gas turbine growth. We're investing deeply in the grid, transformers, switchgears. We're in the first half of this year, we'll close a $5 billion acquisition, giving us a lot more grid capability. And then nuclear is a big one, and probably the one we're iterating with the administration on the most right now to really restart nuclear build in the U.S.
Of course, the president agrees and has put the issues in place to do just that. Where does the growth come from at GE Vernova, let's call it the next 5 years?
I think it's all the above. We're in a point in the country where we need to apply the right technologies where the right resources exist. That's going to be a lot of new gas. We call gas the force multiplier that enables all other power generation sources to also come. Nuclear is going to get back into the game. After 15 years with very little nuclear growth post-Fukushima, now is the time for new nuclear growth. But we also need to invest in our grid, because if we invest in the grid, we can drive a lot of efficiencies through the existing system, and that's going to play an important role.
So tell me about the customer base. Is it largely the same across the world? Is the U.S. making up the big bulk of business?
The U.S. today is a larger proportion of our orders book than it's been in a while. There's no question about that. That includes the hyperscalers coming in and committing to a lot of the long lead equipment to secure supply. The traditional utilities are playing an important role also, but we have big markets in places like Taiwan. Think about funding TSMC's growth with chips. Saudi and the kingdom at large trying to move away from heavy oil into more of a gas-oriented electric power system. So there's opportunities throughout the world.
Do you worry that the president's moves on Greenland and the Europeans push back, saying, look, we're not even going to do that trade deal now. We're going to put it on hold until we talk to the president about his plans to acquire Greenland. Do you worry that that throws a wrench in a lot of your plans?
I think it's been very clear over the last year, if not longer, that we need to invest in supply chain resilience throughout the world and have local supply chain to support our local markets. We were doing that before last week. We're still doing that today, and we'll do it tomorrow.
What about pricing? What can you tell us about pricing on gas turbines right now?
Well, pricing is definitely more healthy today than it's been historically. We're also spending a lot more money to make these gas turbines. We're investing over $700 million in our Greenville, South Carolina facility to capacitize for more growth, and we're having to invest in our supply base. So it's costing more to build new gas turbines. Pricing to the end market's going up too.
So are you looking at earnings growth slowing down because of the spending, or do you see this as sort of a decade-long growth story?
We're in the very early stages of an investment supercycle with substantial growth and margin expansion that we expect. Now, some of that margin expansion is going to have to come from driving variable cost productivity. We're going to have to get more productive in our factories over time to drive that margin expansion, but we're confident we're going to get both.
Are you using AI in this? How is AI changing the way you operate?
It's early at this point for us, but we're starting to see engineering productivity. We're starting to leverage AI for some of our back office functions, and we'll keep leaning into it to a larger extent from here.
So what can you tell us about the trajectory of earnings in the coming couple of years?
Well, we've talked about a business that by 2028's 20% EBITDA margins will be mid-$50 billion of revenue within 3 years. That's off of being less than 10% EBITDA margins in 2025. So we will double our margins from 25 to 28. And by no means is that the end point. We see real opportunity to expand from there.
That's a big deal. What can you tell us about what you've learned from your customer base in terms of the macro story? How do things feel to you in terms of the economy?
A lot of demand. There's a lot of resilience, and I'd say durability that if you just take a step back after 25 years without a lot of electric power growth, the need is there. So it won't be a straight line, but this is a larger market for a longer period of time, and we're investing into it with that underwriting view. We're coming at this every day with a gritty resilience that we can meet this moment. We're inspired by the opportunity, by the president's vision, and we're going to meet the moment and look forward to doing that.
Is Davos different for you this year than in past years with President Trump sort of dominating the conversation?
Probably every year is a little bit different for sure, but we're here to serve this market and to learn and get better every day, and that's what we're going to do.
Scott, it's great to have you this morning.
Maria, thanks again for having me on the show.
Thank you so much. Scott Strazic joining us. We'll be right back.